The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone. Good afternoon, and welcome to the Sirius Report Market Wrap-Up for Monday, November 18th, 2024. Well, it wasn't a whole heck of a lot going on in the equity markets, but the bond markets, gold, oil, cryptocurrency, etc., seem to have an effect based upon what some on the surface may be the United States trying to escalate the conflict between Russia and Ukraine by allowing longer range missiles to be used by the Kievan government. So we're going to take a look at how those economic data points fared today, and we're going to take a look at a study that has finally come out that poses the argument that we have been in recession not for the last 6 to 9 months, but going back to 2022. So that being said, let's go ahead and jump right in and see how the markets fared. Well, on an up and down, crazy, turvy day with not a whole heck of a lot of volume, we did have a red on the Dow and green in the NASDAQ and S&P 500. Dow was down 55 points to close out at 43,389, while the NASDAQ was up 111 points, closing out at 18,791, and the S&P 500 was up 23 on the dot, closing out at 5893. In the bond markets, earlier today, yields had spiked, but had a little bit of some buying pressure at bringing down the yields a bit. The 10-year was down 0.008, 0.81% to 4.418, while the 2-year was down 0.017% at 4.284. Meanwhile, the 20-year climbed, and as well as the 30-year, to 4.712 and 4.61 respectively. In the dollar markets, well, after having a big boost following the election last Tuesday, the dollar finally had a little bit of a sell-off. On the DXY against a basket of Western currencies, the dollar was down 47 cents to 106.22, while gold saw a big boost at one point up over $1.10, but closing out the trading day up 91 cents to this is silver, to 31.21, and gold had gotten as high as 26.15, up $54, but closed out the trading day up 48.10 to 26.11. In the crypto markets over the last 24 hours, after a little bit of sell-off heading into the weekend, we had a boost here Monday morning. Bitcoin over the last 24 hours is up 2.19% to 91,835, and Ethereum is up 2.91% to 3165. Now, I had mentioned last Friday that Paul and I were going to do a deep dive into Bitcoin, Tether, and the dollar. We're still planning to do that when we do some recordings tomorrow. Real life and family stuff got in the way, so we didn't do any weekend recordings, but wanted to make sure, and you guys, I didn't forget you. You want to know what's going on with it. So we'll be diving into it tomorrow, and it should be up probably either Tuesday, Wednesday, or Thursday. In the oil markets, recovery on oil is World War III propaganda and hype starts hitting the mainstream, or at least the alternative media. WTI was up $2.22, closing out at $69.24, while Brent crude was up $2.37 at $73.41. Looking at the data ahead for the week, let's see, today's 18th, so we've got the NAHB Housing Market Index. Didn't really see what the number was today. That data point really isn't the highest level we should look at in regard to housing, because we're going to get building permits and housing starts tomorrow. Meanwhile, on Wednesday, we got initial jobless claims, Philly Fed business outlook. On Thursday, we've got existing home sales And on Friday, we've got University of Michigan Senate report, as well as SP Global PMI. Well, there's a big question now as more and more cabinet members get nominated or assigned by Trump for his new administration. One of them, and probably one of the most important, is going to be the Treasury Secretary. There's a lot of things in regards to tariffs and trade wars, as well as fixing the economy, that Trump wants to go ahead and try to implement. And as such, one of the problems he had in 2016 when he brought in Mnuchin was still too much establishment. And he fought tooth and nail against many of the tariff and other different policies. Despite the fact that we did have a boost in economic growth and a lowering of taxes, it still wasn't to the nth degree that could have been done. And especially with Trump wanting to see about removing things like Social Security tax, tax on tips, taxes on anybody who's retired, probably taxes on the military, et cetera, you're going to want a Treasury Secretary who's going to be willing and able to fulfill and do what you want, rather than doing their own thing and being sort of an opposition post to the president. With this in mind, there have been two picks that have been talked around for a while. One is Scott Bessent. He has extreme Wall Street experience, but he's also was a protege of George Soros. So he's not somebody necessarily that you're going to want, to running your Treasury Department. It'll be just status quo, business as usual. The next, of course, is who is the individual that they're looking at? Howard Lutnick, who has been working on the Trump campaign. He is being pushed by Elon Musk and RFK Jr., and he's somebody who might be a decent pick, but interesting enough, it looks like both of them were vetted, and according to sources, Trump is going to go ahead and expand his search for the Treasury Secretary. So it's going to be interesting to see who might get that position. But either way, it's one of the more important ones, just like the AG, and in the case of with RFK, Health and Human Services. Taking a look at inflation. Well, one of the things that we are starting to see come out now that the election is over, our real data numbers are percolating into the mainstream media. Why? Because they want to set the table for Trump's return to look as awful as possible. That's not something necessarily new. It happens just about every election cycle. But one thing I want to point out is we talked about last week, inflation. CPI was up, PPI was up. And over at Shadow Stats, which has some of the using the 1980, which is what Volcker used, and the 1990, which was what Bill Clinton used, alternative CPI figures, we're looking right now at using the 1990 based ones. We are still over 7.8% inflation. Not the 3% that the Fed keeps trying to push, but 7.8%. So you wonder why the question going around mainstream media is, why didn't the Biden administration push their inflation and economic policies better to the American people? Well, it's the same reason why I dabble in economics as a historian. Because it's a social science. You don't have to go do all these surveys. You can just talk to your neighbor. You can see your community. You can go down the street and see the different businesses that are laying off people or closing up, or the different strip malls that only have 3 or 4 stores in them and the rest of them are gone. No more anchors. No more anchor stores. Malls closing. It doesn't take a rocket science, and it doesn't take somebody from Wall Street spouting their BS to know whether a community, a state, or the country itself is in recession. Inflation hurts it a great deal, but a lot of it has to do with jobs and productivity. What are the other key indicators? Nearly 40% of cars that have been financed since 2022 coming out of the pandemic are underwater. The delayed day of reckoning has arrived for millions of Americans who purchased vehicles during the pandemic auto boom. Many are now finding themselves trapped in negative equity and burdened by costly monthly payments. Many of them are over $1,000 a month. Bloomberg's Intelligence's Joel Levington published a new report Monday citing new data from CarEdge that showed a staggering 39% of vehicles financed since 2022 carry negative equity, including 46% of them being EVs. So, how are people going to get on that? Well, we've got student loan debacle, people underwater for that. Mortgages are too high, rents are too high, car payments are too high. The inflation is affecting the price of food. It's not rocket science. And yet those in the Beltway, of course, cough button. Those in the Beltway or those on Wall Street, of course, who can supersede inflation by having higher net worth, they don't really take the time to see what's going on the street and with regular Americans. And this is why they still are denying what happened in the election, the presidential election. Finally, the last thing I want to take a look at, there was two professors, E.J. Antony and Peter St. Onge. Peter is quite prolific out on Twitter/X. Recently, they published an excellent study called Recession Since 2022. U.S. economic input and output have fallen overall for 4 years. They did this through the Brownstone Institute, and it perfectly summarizes why Americans have not responded favorably to Bidenomics and the propaganda that was pushing the best economy in the world or the best economy ever. The study concludes that adjustments reflecting a more realistic measure of average price increases in the period have understated CPI by nearly half since 2019. And I just pointed out that from Shadow Stats, where the Fed and the official number is 3.3%, but in reality, we're sitting at 7.5 to 7.8%. An enormous divergence being reported between CPI and adjusted inflation, leading to an overstatement of cumulative GDP growth by roughly 15%. Furthermore, these adjustments indicate the economy has been in recession since 2022. The study reveals the understated CPI and GDP deflator measures of inflation have boosted GDP and real disposable income, resulting in figures that no American who pays bills and receives a wage can relate to. Once adjusted, the harsh reality arrives. U.S. economy has been in recession for years, and this is why they have to do so many revisions, and they are doing multitudes of seasonal adjustments because they're using these wrong indicators that are completely abhorrent to what the general economy is doing, to what's happening with unemployment, what's happening with wages, what's happening with prices, that they have to try to spin it just to make the government look better. And as I mentioned, Americans are not stupid. You cannot tell them the economy is marvelous and stronger than ever when they do not see it in their daily finances. This is the reality, and this is here at the Sirius Report, what we try to give you. Anyway, I want to thank everybody, as always, for being a part of the discussion and being part of the Sirius Report community. Don't forget to subscribe, like, share, comment, send this out to anybody you think could be important. As I mentioned, Paul and I will be doing some recordings tomorrow, one on the Bitcoin Tether dollar correlation, and then, of course, we're probably going to talk about World War III. That's not really World War III, but there are going to be some consequences and ramifications to it. So, until the next time we get together, everyone, have a great Monday.